Hello and welcome to the 138th issue of Wiser, your weekly update on the latest in technology news and trends. In this week's show, I have some fascinating stories to share, from an investigative report on the use of pirated books in AI models to a US appeals court ruling that could transform the crypto market. Plus, I'll take a closer look at Elon Musk's latest self-driving demo and what it means for the future of autonomous vehicles. So sit back, relax, and let's dive in. The Atlantic recently published an investigative report that uncovered a surprising and controversial practice in the field of AI, the use of pirated books to train large language models. Now, according to the report, over 170,000 books, most of them published in the last 2 decades, are part of a dataset called Books 3, and they have been used to train Meta's Llama 2, Bloomberg GPT, Luther AI's GPT-J, and other unnamed models. The article raises legal, moral, and ethical questions that are central to the future development of generative AI. For example, is it acceptable to use content without permission, or providing compensation from or to the authors of those books? And what are the implications for quality control and accuracy in AI models that are trained on such data? And what role should regulators and industry leaders play in ensuring that AI is developed in a way that is fair, transparent, and responsible? Here's the thing. Big tech companies like Meta, Google, et al. Have profited off the work of others for the past 2 decades. The news industry missed a trick in the early 2000s by naively allowing Google unfettered access to all of its work. The question is the same about to happen again with generative AI? Well, according to Rebecca Tushnet, a law professor at Harvard, the law is unsettled when it comes to fair use involving unauthorized material in this way. So the answer may well be yes. And the point is that once the LLMs, the large language models, have been trained on any data, it can't be untrained. There's no taking the eggs out of this cake. That's why you're most likely to see licensing deals between the big AI firms and the big media firms. But there's a second angle to this story which shouldn't be overlooked, which is the question, why train on books at all, as opposed to content on the open internet? Well, it's really quite simple. The large language models need to be trained on good stuff. If they just scraped the open internet, they'd collect the vast majority of banal and meaningless fluff that's on the web. From misinformed blogs to corporate marketing babble, you can find tons of vacuous writing that reads well for the harder thinking, but leaves the curious none the wiser. If you fed the large language models on a diet of this tripe, you'd end up with more of this drivel. And as they say, garbage in equals garbage out. Now, expect the debate on the legal, moral, and ethical issues around generative AI to simmer along in the background for a long while yet. Now, my second story is about Bitcoin, a theme I've not covered so much recently. Well, this week, a US federal appeals court ruled that the Securities and Exchange Commission, the SEC, must reconsider its ruling on the Grayscale Bitcoin Trust. Okay, so what's that all mean and why is that important? Well, it's because it's a decision that could be a game changer for crypto, as it would give crypto or less crypto savvy investors easy access to cryptocurrency as an investment asset class. The point is that instead of owning Bitcoin, which can be a barrier for some people, investors could simply buy into an ETF, which they're more familiar with, and get exposure to Bitcoin as an asset class. Now, the original issue was that the Bitcoin ETF in the eyes of the SEC wasn't an ETF at all, and so they denied permission to the investment firm Grayscale to convert their Bitcoin trust into an ETF. This has been going on for about 2 years, by the way. Now, this ruling this week the judge has told the SEC that they got it wrong. They should not have denied Grayscale. And remember, it's not just Grayscale impacted by this ruling, because there's also Fidelity, BlackRock, VanEck, Invesco, and others who have all put in filings with the SEC to have Bitcoin ETFs. Here's the thing. SEC Chair Gary Gensler has been waging a war on crypto for years now. Every time the SEC object to something in the crypto industry, it ends up in court. And more often than not, the regulator loses. Now, Gensler just doesn't want to see a crypto market in the United States. That's my conclusion and assessment anyway. And he is pursuing a King Canute strategy that will fail as long as there's life in Bitcoin. The point is that there is a market demand for a Bitcoin ETF. Anyone wanting exposure to Bitcoin without owning one, just as the same way as you want exposure to tech stocks but don't want to actually buy Apple or Alphabet stocks, a Bitcoin ETF is the obvious vehicle. And as Bitcoin's credibility steadily increases and it becomes a viable and sustainable asset class, then an ETF just makes sense in a diversified portfolio, regardless of whether you believe in Bitcoin or not. Just looking at Bitcoin as an asset class, its price is up nearly 25% year on year. So why wouldn't you invest in it? Now, this ruling shows that the regulator strategy is failing and that the demand for Bitcoin and Bitcoin ETF is only likely to increase in the coming years. Finally, I turn to Elon Musk and his latest self-driving demo. That's right, I'm not going to be talking about Twitter. Now, this has been making waves in the tech world after he live streamed, unannounced, driving around California in his very own Tesla Model S over the weekend. Musk was demonstrating a new version of Tesla's full self-driving software, which is called version 12. This version is noteworthy because version 12 is unlike previous versions of Tesla's self-driving software, because version 12 doesn't use a single line of computer code to pilot the car autonomously. Unlike previous self-driving software versions, this is based on observing how humans drive and learns from their behavior through the use of artificial intelligence. So just to make that clear, in previous versions, computer code would say, there's a speed bump, slow down. There's a red traffic light, slow down and stop. And these would be hard-coded behaviors written into the code. Now, what this new version of AI is doing is watching and using machine learning to observe the driving behavior of the human, and it's learning how to make decisions on whether to actually stop at the speed bump or just slow down, whether to stop at a traffic light or just ease into it slowly because you know it's about to change, just as you would do with a human driving experience. Now, here's the thing. Tesla is an AI company first, and it happens to make cars second. It's got a huge lead already over the competition and dominates the marketplace and this sector which it has defined. But the thing about Tesla is that it claims, and they claim, to hold more human driving data than anybody else. And why wouldn't they? Tesla also has its own AI supercomputer, which happens to be called Dojo, which runs on about 10,000 NVIDIA superchips to drive its AI capability. Basically, it's a very large and powerful computer. Now, what's important to know about version 12, this is self-driving AI that could transform the future of self-driving, as well as every type of machine learning robot and autonomous machine ever that's going to be made from today on. Now, that's because the new Tesla software learns to drive or act or behave the same way that humans learn to behave, by observing the actions of real humans and then replicating them through machine learning. It's not going to be following the instructions of hard-coded computer instructions. Now, whilst this is early days and everything Musk says should be taken with a degree of skepticism, this is an exciting vision of what's to come or what could come, and the advances that Musk's going to be making in his vision for Tesla robotaxis and a fully autonomous fleet of driverless vehicles. Now, before I wrap up this week's Wiser, here are some headlines of other stories that caught my eye. China is set to approve its first public generative AI services, allowing its tech companies to compete with US-based models. China's endorsement of the industry comes after implementing its first AI regulations earlier this summer. Google's Duet AI can now write your emails for you. The company's corporate $30 a month subscription AI Copilot has a range of new services and can enhance Gmail's existing smart reply features by allowing users to draft longer and more personalized emails with a simple tap. I'm going to be talking more about Google's new product announcements in next week's issue of Wiser. Microsoft has unveiled a new AI training model called the Algorithm of Thoughts. Now, it's designed to make large language models like Chat more efficient and human-like in their reasoning abilities. The new approach is the natural next step for the company, which has invested heavily in AI and particularly in OpenAI, the makers of DALL-E and Chat. General Motors is to use Google's AI chatbot for its OnStar in-car concierge. This will give drivers the ability to get responses to common queries like routing and navigation assistance by speaking directly into their vehicle. And the move to upskill OnStar's capability is in line with General Motors' greater strategic vision, which is to build a $25 billion subscription business by 2030. And finally, in terms of AI stories, this is a funny one, but it's also a serious point that's going to be made here. So while some experts estimate that 90% of online content could be AI generated by the end of the decade, the Columbus Dispatch has halted its use of AI. This comes after an illegible AI-written article detailing a high school football game went viral. The article had clearly not been proofread by a human because it was meaningless drivel, but it was posted anyway. And it's a lesson for all of you, us, using AI for your or my or our content creation. It's a tool. It doesn't replace you. Now, in non-AI news, Amazon is rumored to be developing its own NFT marketplace, but the retail giant is already playing in the NFT space via its Prime gaming portal and are giving away NFTs totally free for subscribers. If you pay for an Amazon Prime subscription, there's already a selection of free NFTs that you can claim and use in current blockchain games. Now, delivery robot company Starship has said that its rovers will be on 50 university campuses this autumn in the United States. This is in addition to the over 2,000 delivery robots operating across the United States. Other bot companies are expanding too. Coco is in Los Angeles and now Austin, Texas. Ex-Uber-owned Serve Robotics services over 200 Los Angeles restaurants. And Uber Eats has partnered with Serve to deploy 2,000 more delivery robots. And finally, high-tech NeuroSkin trousers powered by artificial intelligence are helping stroke patients regain their walking ability. The NeuroSkin trousers stimulate the patient's paralyzed legs using electrodes controlled by AI. Now, electrical muscle stimulation is nothing new and has been used for stroke patients for decades by zapping weak and atrophied muscles back to life. But it is a blunt approach, and these new AI-powered NeuroSkin trousers offer a more targeted and precise approach for sufferers looking to regain the use of their legs. Okay, that's all for this week's episode, Wise. I hope you enjoyed the show. Please hit the like button and leave me a comment if you did. Check out the show notes for all links and remember to subscribe to the newsletter to get insights on their top stories in emerging tech shaping tomorrow's world. Be sure to tune in next week where I'll be discussing Google's latest set of announcements of AI tools and capabilities and all things emerging tech. Thanks for listening. Have a great day.